Hi, we're welcome to Universal Basic Calcia, guys. So we're in the aftermath of the State of the Union, and Mike, you had a pretty good day. If you want to boast, but I guess we were both right about Musk, right? And
Yes.
you did pretty well overall. Want to recount your evening?
Yeah. So let's dive into it. You also did really well. So I want to make sure we get to that as well. But yeah, I came away from the shutdown really happy with my bets. You'll recall from last episode, I was heavy on Musk not attending. So I was able to buy into No at like 75 cents and I just loaded up on that position as much as I could. So that really, made me come away with some profit. But I also was heavy on Al Green attending. I was able to get him at like 43 cents a share as yes. And at the State of the Union, he showed up and protested as I predicted he would. So I was very sort of happy that not only did he attend, but he did what I expected him to attend when he went there. The only one I was a little sort of disappointed about was, Barron attended. I was confident all the other Trump family members were going to attend, but I did lose a little money on Barron, no. But it was an eatable loss because the rest came out in my favor. And as I understand it, all of your bets came in. So why don't you tell us about that?
I will in a second. Let me just ask you: did you watch the State of the Union?
I did. I did watch it.
Did you enjoy it?
I did not enjoy it. I did not enjoy it at all at a macro level. I enjoyed making money off of it, but that was about
Right.
all I enjoyed.
I did not watch. I did not watch. I knew I would not enjoy it. Um, I did see Al Green's sign. I thought the Democrats shouldn't have gone. I thought that would have been the best way to approach it. So actually, there were a lot of empty seats, and Chris Murphy et al. Did not attend, as he said he would not, allowing me to make a 3% return on
Right.
short-term return on that money. But I actually thought that was sort of would have been a more impressive visual. Curious how they thought that through for themselves. I guess some people think it's just important to show presence, but I didn't see it on this occasion. And I didn't think
Right.
Al Green's sign, I mean, though obviously I'm with him on the sign, I didn't think it looked great.
Nah, I don't think it looked great either. I think we topped out at something like 30 Democratic objectors. So it did. It lended itself to the impression that they were sort of divided about how to proceed. Al Green's protest was, very quickly put down. So I'm with you. I mean, if you could get the body to sort of coalesce and agree on not being there, it looks good. But once you have this division, it's sort of just, nobody knows where to take the narrative, right? So,
All right. So enough with substance, on to money.
money.
I did go 6 for 6. Now I was gonna come on and blame you for talking me down a little bit on Ketanji Brown Jackson and Kennedy. However, much as I would love to bust your balls for doing that, you really didn't cost me any money because I just shifted my bets onto Musk. And I think you and I left. It's funny because we hadn't come on to that stream intending to talk about Musk.
Yeah,
It was
we
on our
arrived.
list, but we both left feeling pretty confident in that position. So I was fine. I wanted to just raise one thing and kind of looking back on those bets that I think is a good thing to discuss. So I didn't watch, and partly I asked you that. I didn't watch, but I did watch Kalshi a bit, which was
Yeah.
interesting. Uh, so at one point, I was very long on that he would say the words, the state of our union is strong. And I think I recounted my reasons for that last time. I was as close to 100% on that as you could be. But for bankroll management, I would have, I just think as a general matter, nobody should have all of their money on any one proposition. But I would have been really, really long on that if I weren't constrained by, you know, still having to exist or fear of not being able to exist. And I saw, that the price went up from 73 cents to 99 cents. So I was like, oh, well, I guess he just said the state of our union is strong. Now,
Yeah.
yeah, in the run up to it, what I wanted to raise and tell me how you deal with this too. So so I had the no on Ketanji Brown Jackson, and I did not ever, I guess I would say I thought the chance of Ketanji Brown Jackson was around 5% when we got on the stream. And you softened me. We had talked about it on the phone, but on the air, I would say I bumped it up to like 15 to 20%. So I think you were closer to a 50-50 proposition. So I bet a little less. But my core thought was A, there's no expectation that all Supreme Court justices go. She had just delivered a decision for which she was going to be excoriated. And I will bet anything that she deplores Donald Trump as a human being and did not want the psychic experience of having to watch.
Neither did I. I'm not even
Uh,
a Supreme Court justice. So yeah.
right. Yeah. A man who had just, tweeted a photo of, the Obamas as apes. I think she didn't want to do that. Now, so while I didn't watch the State of the Union and I watched plenty of cable news, but I didn't watch the round table of 10 people going up to it, the price on Jackson attending, so I'll just do it in yes terms,
Mhm.
went up significantly. Let me flip that. I'll do it in no terms. So the no price at one point dropped to 1%. So at first I was like, oh, she must have just announced that she walked in. Now, let me just say one other preliminary thing, which is it was not a robust market. So there's a big spread between bid and ask. So it could just be that somebody bought one share. But I went online and I was like, oh, did she just announce that she's going? Which would be very unusual for a Supreme Court justice, or maybe she had walked over to the Capitol earlier or something like that. But I saw no evidence of that. Let me just pause here for a second to ask you how you handle situations like that, because it comes up for every bettor, and I'm sure everybody listening will reflect on this for a second. So how do you deal with that?
First of all, I guess the thing I come into it with is once the event is live for any particular contract, there just starts to be a lot of noise and ambient anxiety among traders, especially ones who aren't well informed, who haven't done the deep research. And I think honestly, that's probably most traders or close to it, right? A significant proportion of traders. So I mean, the correct way to think through the question is exactly what you did, to look for public statements that she's attending, which, wouldn't be there. You're right to identify that, or to see like if there's credible evidence. But if there's not, then one sort of has to, by default, conclude there's just some kind of pricing anxiety in the market. Now, if I see a swing that's as dramatic as you said, where, the probability in the market starts to approach certainty, then my thesis about ambient anxiety sort of starts to recede. And I start to think, okay, is there something materially happening here that's based on limited information that's only accessible to a few actors and it hasn't been publicized, right? So, in general, I start to think in terms of, okay, there's ambient anxiety, people are making hasty decisions. But when I see price action like you described with the, Brown Jackson question, then my confidence in that sort of decreases, right? I start to think, is there inside information at play at that point?
Okay. So this is one of many reasons I love you. I think you set that up rationally. Now, let me use this as an invitation, and we'll talk about many of these here to talk about a heuristic bias, right? So a heuristic bias is just a way that the brain has evolved, but just doesn't function right. And in very general terms,
Well, it's really, if I could just say, I don't mean to interrupt you, but it's really just false pattern recognition, right? So you're
sure.
still trying to establish
Well,
pattern recognition. It's just being conscious of when patterns don't actually apply materially to the question at hand, right? That's what you're saying.
that's one. I'll say maybe that's part of it, but I'll just say the brain is inclined to process information in a suboptimal way. And
Yes.
one, you know, humans evolved like when human predecessors lived on the savannah and, they were constantly checking whether they'd buried their food. Well, there was objective reason to fear that a tiger might come and maul them in the middle of the night, right? So
Sure.
humans have a lot of kind of fight or flight instincts that really aren't well adapted to modern society, which has really only lasted 50,000 years at the most and is a blip of mammalian history.
Yeah.
So one heuristic bias is bandwagon effect. And it's very, very tempting to adopt the beliefs of the majority. And there's tons of contexts in which this is true. I'll put in the show notes one of the books that changed the way I looked at the world is Thomas Kuhn, The Structure of Scientific Revolutions. So if you're, living in a flat earth society and then you're Copernicus or Ptolemy, Who's our first rounder? Well, Copernicus would be Earth revolving or heliocentric as opposed to
Oh,
Earth centric.
okay.
Anyway, so if you're adopting a new scientific view, right, it's very, very hard to be the dissenter. And we see this in tons of ways.
And it's punished severely too.
And punished really, except not in markets. That's where markets are nice because we're not engaged when we're wagering in an effort to win friends. We're engaged in an effort to win money.
Right.
So,
Short-term punishment, long-term profit. Yes.
and this is where, and you and I are very similar in this regard, though I think we're unusual. So I'm Vulcan, autistic, neurodivergent in this regard. I actually don't care about other people's opinions.
It's a big
I care
strength.
about
Yes.
your opinion. I care about your opinion because I think you have a very informed opinion, but I don't care about the overwhelming majority of opinions. So Ketanji Brown Jackson's price started changing dramatically. Now, I did exactly what you described. I looked, was there any objective information? And there was not. I did fear inside information, though I couldn't imagine what that would be exactly. Hard for me to imagine Ketanji Brown Jackson's nephew or something like that trading on Kalshi,
Right. And you'd also need somebody with a bankroll of tens or hundreds of thousands of dollars to really influence the market to such a extreme, right?
right? And so I was like, it's just what's happening is what you said. It's just anxiety. And I ignored it. And actually I just bought more. So I significantly reduced the average price of my Ketanji Brown Jackson no wagers by just continuing to buy. And I'll reduce that, and you can say what you think, to one core thing is those comments in all of the prediction markets are beyond irrelevant, right? They're many instances in time inclined intended to deceive people, and you should ignore them. You should just rely on evidence, journalism, not the opinions of others. And I know that could be hard to do, but that's the way you got to play this game.
Yeah. No, it is hard to do. But like you're intimating, and I agree, if you can sort of distance yourself from the beliefs of the majority, which keep in mind, right, the belief of the majority sort of has a reinforcing effect for most market participants, right? So as I'm kind of modeling it, about half the market or maybe slightly less is just sort of basically uninformed at a sort of moderate or deep level. Like they might have some high level details of understanding, but they don't have sort of the information that would really make their position reflective on the evidence as opposed to reflective on the perceptions of other market participants. So it can have this kind of incubating effect where when the bandwagon effect, as you mentioned, starts to roll, you just get more and more market participants latching on to the belief of the majority as opposed to weighing evidence. And I think that influences the rate and severity of price fluctuations. But let me ask you, so I do have a question. What kinds of strategies do you adopt to guard against letting beliefs of the majority influence your own positions?
Okay, so you and I both used to um, bet on Predict It before we lost confidence in the solvency of that market. Yeah, I don't read the comments. I would say I'm going to answer your question by saying how I approach my life. I mean, I'm a long thinker, right? So we talked about this last time too. I'm always trying to disprove what I believe. So, like, I'll form an opinion about something. And whereas a lot of people look for confirming evidence, I look extensively for contradictory evidence. And then when I can't find any, then I'm prepared to bet on it. So I had a core sense of why Jackson would not be there, which was pretty strong, not as strong as the core sense on Murphy, Gavin Newsom, and Musk, but nothing changed that. So if I have that core belief and I'm betting on it, then the price does not affect my core belief. My core belief is my core belief. I'll give you an example of this. Okay, my dad, whatever. I've done very well. I'm a poker player. I bet on horse racing, but I really think of it as investing. So when my dad loves horse racing and he knows a fair amount about horses, but I will go to the track and this is a hard thing for people to do, right? If I see a horse that's 10 to 1 meaning it has, or 9 to 1, meaning it has an implied 10% chance of winning. But I think it actually has a 15% chance of winning. Well, that's a valuable bet, and I'm going to make that bet. Now, this is what's paradoxical about this, or odd about the human brain. If I show up to the track and I think the horse has a 15% chance of winning and it's 20 to 1 instead of 10 to 1, as it was in the morning line, many people will be dissuaded from betting on the horse because they're taking a more contrarian position.
Right.
I will bet more.
Right. No, that makes sense to me. Yeah.
And then, sorry, no, no.
No, I was going to say, I mean, it makes sense to me because it holds with your overall position and mine. It's like once we come to a core belief, as you called it, we already know internally because we're always trying to disprove our own narratives that the core belief isn't coming from some like psychological satisfaction or some
Correct.
sort of affirmation of identity, right? So we go into these questions a lot more level headed. And, I still feel the anxiety in my gut when a lot of money is
Of
on the line,
course.
of course. But we still go into these questions with those core beliefs unaltered. So it makes total sense to me. I mean, if the odds in the horse race, like you said, drop from 10 to 1 to 20 to 1, but you can't see any disconfirmatory evidence, then you double down on your position, which is
Correct. But
precisely what I
most
would do.
people won't do that. And
Right.
and this
They
is
won't
why
be
what
able
you're
to swallow the
saying
anxiety, right. Yep.
this is why what you're saying is so important. So I look, when I was 17 years old, 18 years old, and I could first go into a casino, I used to play blackjack. But blackjack, played perfectly is a teeny tiny losing proposition.
Yes.
And then I was like, discovered poker and I was like, oh, wait, you mean I can compete against others and I have an edge? And, I have a
Yeah.
really good record as a poker player. Anytime I'm gambling other than for fun, which is basically never, I believe I have an edge and I have an understanding of why I have an edge. And why I think you and I have an edge in this market is what you described, because we won't fall prey to that. And before we move on to talking about the shutdown, I'll just end with the story. First time my dad and I went to the Kentucky Derby, and it was great. It was a bucket list thing, but there was a horse coming out of the previous prep race, the Wood Memorial. A horse named Empire Maker had beaten a horse called Funny Side by a half a length, which in horse racing is effectively within the margin of error. Okay. And coming into the Kentucky Derby, Empire Maker was 2 to 1 and Funny Side was 10 to 1 or 8 to 1. And I said to my dad, well, at relative odds of X, Funny Side is the bet. And Funny Side's price actually went off a little higher, 12 to 1, as I recall. And my dad was like, he was very inclined to go along with the favorite, who is the most likely winner, but
Yes.
not the most valuable bet.
Right.
And I
You're
stuck
thinking
to
in
my
terms of
guns.
expected value, right?
We won $25,000 on the race. And then this is the best part of the story. We were in Louisville. We had a giant wad of cash, which was very fun. I was there with my dad. That's the best part of it. And I went back to the hotel and I said, what's the best restaurant in Louisville? And he said, well, there's a Red Lobster down the block.
That is the best part of the story, undoubtedly.
It's a good story. All right. So let's talk about the shutdown. So what's going on, Mike? You want to give us an overview and then we can talk about the markets and kind of where we are and where we think they're going to go.
Yeah, I'd be happy to. So the way I want to structure it is sort of thinking through past shutdowns in the modern era, just briefly. Then we'll move into the longest shutdown in history, which I think is sort of proximate and really contextualizes the present shutdown. And then we'll move into the present shutdown. So just thinking about the overall sort of arc of modern shutdowns, since 1976, there have been 22 instances of federal funding gaps, which basically qualifies as a definition for a shutdown. There's a little ambiguity here, but you can kind of just take that as the model. So in 95, there's famously a 21-day shutdown. This is a severely protracted shutdown relative to the ones that preceded it. And it sort of sets the stage for the modern era where you have like weeks-long shutdowns as opposed to a couple of days over usually procedural instability or something like that. So that started in 96. But then the more relevant ones that come up don't start again until 2013. We have a shutdown that lasts 16 days then. Famously, we have the border wall shutdown. That was 34 full days during Trump 1. Democrats refused to give funding to the border wall, right? And ultimately, Republicans caved on that issue. And then we get into that 43-day shutdown, which I'd like to describe in a little bit more detail. So, on that shutdown, really what was at stake was,
Funding for Affordable
yes,
Care Act subsidies, right?
funding for Affordable Care Act subsidies. There you go. So, Democrats looked at this as a crisis of reducing coverage, right? So, COVID era tax credits were implemented to expand access to healthcare. Republicans argued that these were supposed to be temporary emergency measures, that they were sort of undermining market discipline and fiscal discipline. Subsidies were going to higher income earners than they thought was fair. But Democrats, on the other hand, like I said, contextualized it in terms of increasing equity and coverage and eliminating the subsidy cliff. So essentially, if you were making just $1 above this cliff, then you had no subsidy whatsoever. So Democrats were trying to make that landing pad a little bit easier, depending on terms of income. It's interesting to note that that was a very symbolic shutdown. I think it was a symbolic shutdown that sort of rivals the main shutdown that we're going to talk about, the one that's relevant to our markets today. So just wanted to sort of give some pretext there. We'll move into the present shutdown now. So
All right.
funding.
Yeah. Sorry. Oh, well, let's just review kind of what the prices in the market are and where you and I bought in at and where we stand for a second. So some of the markets have been resolved, right? All of the at least 10 days markets have been resolved. And what's open is at least 43 days, which would be through the end of March, which is at 63 cents. At least 50 days is at 47 cents, 60 days, 29 cents. And the longest one through May 15th, which is 90 days at 15 cents. Now, you bought into this market very early, as I recall, right?
Right. Yes.
And you were long on long. Is that
Well,
right?
yeah, I was long on long, and I could take you through sort of intrinsically why I was long, and also structurally in terms of market arbitrage while I was wrong, or
Okay.
why I was long and correct, not wrong.
Yeah, yeah,
Yeah.
yeah. Okay. So go
Yep.
ahead.
All right. So basically, when the market opened all the way up until about February 18th, the market was predicting a shutdown that would last between something like 15 and 25 days. So since February 18th, that shot up precipitously to 45 days. So when I was entering this market, and I think it was something like 1 or 2 days after the shutdown commenced, what I was considering, first of all, was that there was low liquidity in the market. I sort of thought that the price realization function hadn't developed very well. So I was long intrinsically on the shutdown based on priors. Like, so you're talking about Bayesian probabilities and updating priors, basically. I was thinking, well, the last shutdowns that were symbolically meaningful lasted a long time. Also, another factor that was sort of intrinsically in favor of a long position here was that this particular market is for a partial government shutdown. So the externalities aren't there as they would be in a full government shutdown, therefore, sort of reducing the gasps that the Democrats and the
L-
Republicans have to sort of
Let's
apply
just
to get
let's just
resolved.
let's
Yep.
just pause on this for a second and flag a couple of aspects of ways in which this shutdown is different than many prior shutdowns, right? So even the most recent shutdown was a full government shutdown, and people notice some of those services stop, right? So if you happen to be visiting Washington, D.C., the Smithsonian will be closed. There are no more park rangers and lots of government services that stop. Now, this is basically a funding of the Department of Homeland Security. And for the most part, most of those employees have continued to work without being paid, as many essential government employees are required to do in a shutdown. They basically loan their labor to the government. So people are not going to perceive this at an individual level quite as much. And then there's another asymmetry in what's at stake, right? So the prior shutdown, the Democrats really made over healthcare subsidies, which expired at the beginning of 2026. but this is really about ICE. And that is a much clearer message. There's a much clearer connection between what's being shut down, the Department of Homeland Security, and the thing being protested, immigration
Yes.
and customs enforcement. And ICE doesn't have a constituency of people there that are going to be pissed off if they're not served. So this is a categorically different shutdown, certainly than the last one, and different than almost every other one that's come before. So
Right.
your sense of the intrinsic dynamics of this shutdown, I think, was correct and continues to be correct. Now, I'm curious what arbitrage opportunity you saw.
Yes. So I'll talk
You're much
that.
better at spotting arbitrage opportunities than I am.
Right. So I'll talk you through that, but I just wanted to qualify one thing you said. So it is important to note that people aren't seeing in general shutdown services disruptions to their everyday lives because of the partial nature of the shutdown. But even these agencies that are on the, funding chopping block, they're not, as some other agencies would be, ceasing to render services entirely because they're seen as sort of instrumental to the functioning of the government, right? So there's also less on the line in terms of like, DHS and Homeland Security and broader protection agencies for the country are mostly going to operate despite not being funded presently, right? So that's one point I wanted to just qualify in your take there, but I basically agree with it also. The arbitrage opportunity was very interesting. So, like I said, I was coming into this market, which was not yet mature, and I was contrasting the contracts and how long the government shutdowns last. That's one
Uh,
proposition. And in the other proposition, I was contrasting it with when will
when will
DHS be
DHS be
funded again?
funded?
Okay. So what I noticed going into it is something like, let me pull up my notes here for just a sec. But okay. So the no contract on before March 10th, which is uh so the no contract on before March 10th was trading at 38 cents, right? But the yes contract on the government lasting shutdown lasting at least 25 days was yes at 54 cents. So in my mind, these are essentially equivalent propositions. They're off by
Right.
like a day, right? But it doesn't justify an about 20-cent gap in pricing. So not only was I intrinsically convinced that the market was underpriced, but also the structural arbitrage opportunity then lended a lot more support to my thesis. I really piled up on this, and I actually predicted that a week out, the price would rise from 38 cents in the no before March 10th contract to 60 cents. And it did precisely that. It rose in a week to 60 cents. So I was,
So
my
that's nice.
ego
So
was
that's a
satisfied.
50% return, but
Right. Yeah. Yeah.
there is no ongoing arbitrage opportunity or gross market inefficiency, right?
Now the market is basically
So
correctly priced. It might even be overshooting slightly. Right now, the estimate's 45 days for the shutdown.
okay, so it's a mature market now. Now, where are you? Are you still in on the market?
So I sold out all my positions about a day or two, just thinking, we had sort of locked in that period of obviously no volatility where Congress was going to be out of session. And then I was thinking, well, I already locked in the profit from the structural mispricing and the arbitrage. So I just sort of played it conservatively. So I've cashed out of this market.
Okay. Now, I didn't do as well as you did, and we could talk about. I'm interested in the arbitrage opportunity, and I see some, and I'm not against them. Or I wouldn't characterize that so much as an arbitrage opportunity as an inefficiency in pricing, as a clear inefficiency in pricing
That's fine.
between
Yep.
two related markets. Okay, but I was with you on the intrinsic kind of core value proposition here, which was that the shutdown was more likely to go longer than shorter. And so I bought in on I mean, I maxed out on the 5 to 10 days ones because it was clear it wasn't going to resolve since Congress was away. But
Free
I thought
money,
that there
essentially.
was
Yes.
right, but 3% return or whatever. But
Right.
I'm still in on the long, and but I'm going to sell out shortly. So I think there's zero chance that they're going to resolve the shutdown Friday, Saturday, or Sunday. But
Right.
at that point,
Mhm.
yeah, I don't think there's much value after it. So I'm up about 50% on my bets on the longs. I anticipate I'll pick up another couple of pennies on each, but let me tell you, if I may, why I would get out now and why I think you played it right. Okay. So, and I think this is an important thing to have in mind. The longest shutdown, if I'm remembering in government history, was the Affordable Care Act subsidy one, and I think it was 43 days. Is that correct?
That's correct.
Okay. So this is an important thing for people to have in mind, and it's Bayesian probabilities, Bayesian statistics. Okay. And let me give you a simple example of this. Suppose I told you that people who possessed a certain gene were 10 times more likely than people who didn't possess that gene to get ALS, worst disease you can get. And you got a blood test and it came back and you had this genetic marker. You'd be like, oh shit, I'm 10 times more likely to get it. But I would be much less interested in that than in how common ALS is. So if ALS is 1 in 10 million and you're 10 times more likely, well, you're still only 1 in a million chance of getting it. So it's much more important to have a sense of baseline probabilities than it is to have anything else. So, I'll give you tons of examples of this, but like, what's the chance that somebody's a Christian in the United States? Well, there are a lot of Christians in the United States. So if I said, oh, this is a Black American as opposed to a white American, sure, the chance maybe modestly went down, but it's still pretty high. Okay. Now, in this market, to me, the analogy is I think if ever there was going to be a shutdown that was going to go on for a really, really long time, it's this one. This is a
Absolutely
hill that
agree.
makes sense for the Democrats to die on. This is, I mean, I think probably the issue they want to run the election on, but the longest shutdown in US history was 43 days. So let's say this has a 25 times greater chance of being a 43-day shutdown. Well, it's 25 times one time it's happened. And if it's a 25 times greater chance of being a 90-day shutdown, it's 25 times zero. Okay. So you are looking for conditions for an unprecedented event to happen. Now, could it
Yes.
happen? Sure. And you have on our logo, you're sitting in front of a black swan. So I know you like black swan events and we could talk about those, but black swan events are still black swan events, right?
Absolutely. Agree. And a lot of times even low price contracts are overpriced relative to the actual probability that the black swan will take off, right? So
Okay,
yes.
that is a very, very important thing for people to hear. In horse racing markets, there's lots of data. And actually we could link to that very good video that you found, Mike. The long shots are generally overbet and
Yes.
favorites are generally underbet. Just as kind of a rule of thumb, that's where I would go off of.
One, yes, that's true. But also because of the boundaries in a prediction market, it's important to also understand that at the lower extreme is when they're really overpriced, and at the higher extreme is when they're really underpriced. So, what I'm saying is, if the actual probability of a contract resolving is, let's say, 99 plus percent, a lot of times you can pick up that contract at 97 cents, which is just sort of irrational, right?
Right.
But the extremities matter there is what I'm saying. Yep.
Well, this was so, I got a bunch of shares of at least 90 days at like 3 or 4 cents. And I was like, well, now,
It's a great buy, by the way.
right. And so I've 3.5 times my money on that. Now, the thing is, and this is another thing that people have to do, you constantly have to reevaluate your position. So, however, I came to this, okay, now, is there a 15% chance that the shutdown lasts 90 days? That feels like about right.
Yeah,
It's probably a
like 10
little
to
higher.
15,
Yeah,
maybe. That's
10 to
where I would kind of
15.
fall. Conservative estimate, I think 10 to 15 is good. Yeah.
But in that case, there's no value in the bet. It's just a bet that I have.
Right.
So, and I'm just not attached to it, right? And you have to, if you're going to play this game, even at a medium level, you have to deal with sunk costs. So whatever you've done, if you made a
Absolutely.
bad bet, it's gone. If you made a good bet,
Let it
but it's
go.
now a
Yes.
fairly valued bet, that's it. So, I'm very proud that I bought a bunch of shares at 3 cents that are now worth 15.
Yes.
But I think my 15-cent shares, I don't know, they feel like they're about the right price. So I think I'm going to get up to 16, 17, 18 cents over the weekend, and then I'm going to let it go. And perhaps this is the shutdown to end all shutdowns, but probably not. Probably they'll break the 43-day record. There'll be a series of news stories that they've broken the 43-day record. There'll be some pressure to resolve it, and it'll end up going 52 days at the max. So I think there's lots of lessons in this, but you always get this right. I mean, I think it's hard for people. I mean, I think part of why, we first started talking about this probably, I feel like it's like 8 years ago, but
It is. Yep.
yeah, but we definitely approach it the same way. And anyway,
Yeah.
but it is the opportunity if you understand all these things, right?
Right. And you can even start to anticipate, and just kind of dovetailing off of what you said, you can start to anticipate how person's psychology is going to map onto, let's say, like salient events in the timeline of the shutdown. So suppose it does cross the 43-day threshold, right? And headlines start to peak about how dramatic the shutdown is and how this is unprecedented and blah, blah, blah. All of this sort of emotive language being injected into the news cycle. You can even anticipate that on day 42, right? You might want to buy a yes position in a longer duration market, just because there's going to be more buy-in to the idea that this is a sort of precedent breaking and destabilizing shutdown, right? The next day. That's the psychological sort of sentiment that'll take off. So just a thought I had about what you were
No,
saying.
that's exactly right. I mean, I think, believing that other people, most gamblers are emotional creatures. And, excuse me, if you can operate and not be emotional, then that is the edge. So if you say to yourself, well, people are going to emotionally respond to this spate of news coverage, which does not change the core proposition that it's still, in order for it to last 90 days, has to last longer than any shutdown in history, starting today, that
Right.
that's probably pretty unlikely. Okay, so you might buy for a day and then get out of it or whatever. But
Yeah, but I think it's important for viewers to kind of think through what's probable to happen in the timeline and how that's going to affect market prices, instead of just looking always at positions to buy and hold to resolution.
right. And, you know, I think also this is, this point, okay, so I have shares of 15 cents that it lasts 90 days. Let's say I think there's really an 18% chance that it lasts 90 days. And nobody could have any precision of that kind in making a statement like that. But, unless you're playing with $10 million dollars or something like this here, you probably have a finite number of bets that you can make. And I presume we have more money invested than most people do, but we still have a finite amount of money. So I'm always thinking about, is this the best use of my money? And
Yes.
we're aligned on this. Okay, like Trump's not going to get impeached.
It's never
So
happened. Right. The market is
I
pricing
could
noise and time value of money. That's it, right?
I could take my money and I have, I'd say I have about a quarter of my money in this proposition. I could take it and I could get a 15 plus 3% return over the remainder of the year. So I have to think I'm going to do better than an 18% annual return, which beats my IRA. So,
Beats the
you
market. Yeah.
know, right. So I always, watch, he'll get impeached and we'll be
I
the
know. Then
biggest
we'll have to
idiots
end the
in human
podcast.
history. I really don't think that's going to happen. And
No,
actually, we'll do a stream where we talk about this. There are lock propositions in there, and actually, they are priced at. It's interesting. I think there's an implied Kalshi guaranteed return. So that impeachment, any rational person knows that that's effectively a zero chance. So the only reason you wouldn't buy it is that you think you can get more than an 18% on your return on your money somewhere else, or you're a gambler and you just think the San Antonio Spurs are going to cover tonight or whatever.
sure.
And I went and I looked at a bunch of these propositions, like the hard locks that you talked about. We should do it because there's some where it's just basically how much you're willing to tie up your money for. So, all right. So you're out on the shutdown.
I'm out. My basic impression is the market is correctly priced at this point. In terms of the overall prediction, I haven't looked into the subcontracts as much, but yeah, right now we're at 45 days the market anticipates, and I think that's about right. What do you think?
It feels about right. Yeah, I'm going to hold for another few days and then I'm going to get out. And just to be clear, it might go up a little past then, might drop, the shutdown might end, might not. I just don't see any value in it. I just think what Mike was saying in the early days when they were predicting a short shutdown, it seemed clear to both of us that it was likely to go on beyond that. I still think this shutdown is poised to last longer than any shutdown in US history, but it has to go on a lot longer in order for it to get up to 90 days. So I don't think there's
Yeah.
core value in a hold on that position.
Right. But I do agree with you overall. I mean, what Democrats are asking for here is not an easy sell to Republicans. I mean, they want body cameras, they want judicial warrants. Republicans clearly don't want those. They want visible identification, they want tighter rules on the use of force. And just a lot of these things, there's a clear gulf between Democrats and Republicans. And in my view, not much emphasis on resolving it hastily, right? So.
I think actually the Republicans are likely to make some concessions here.
Well, they
If they,
certainly have to. No, I
I
agree
think
with
they
you
have
there.
to.
They have to, but I don't think it'll be quickly, and I don't think it'll be all at once. I think it'll be protracted, and I think they're gonna try to dig in as much as possible because so much of their agenda is based on border enforcement, right? And they wanna be able to sell that to voters. So, yeah.
All right. Well, for all we say about avoiding confirmation bias, I agree with everything you said and
There
have
we go.
sought your
Good.
company because we engaged in extensive confirmation bias. All right.
Right.
So we're going to nerd out kind of all the time. Next week, we'll preview the remainder of the Supreme Court term and take a look at some legal propositions. I have one in there that I think is a true lock, which actually has a little uh, has some value in it. I'll reveal that to you next week. I'm long in there. I'm going to get longer in that market before we make it publicly available. And Mike, we have a mechanism for folks to ask us questions. You want to talk about that?
Yes, so we can connect with our viewers, and of course, we encourage you to follow us on the social medias. I just got up recently, a lot of back end office work there, but I'm glad we got them up. So we're on Instagram, Facebook, YouTube, and one more, one more. Well, let's just start there: Facebook, Instagram, and YouTube under the handle at UBK Guys. You can also always email us questions or comments at admin ubkguys.com. Again, that's admin at ubkguys.com. And we would love to get some engagement from the audience that will help us think through how we approach these contracts in the future.
Yeah, and if you ask us a question, if you send it to us as a voice memo, we'll answer it on the air.
Yeah, however you want to do it.
All right. So there's a foot and a half of snow outside my window. So if you're somewhere where it's not warm, stay warm. And we'll see you in a week to talk about the rest of the Supreme Court term.
Yes, we will. Stay warm, folks, and make some money.
All right. Be well.
Take care.
Universal Basic Calci Guys is produced by Michael Horahan and Evan Mandery. Our theme song is Passing Trains by Nathan Eklund. You can follow us on Twitter and Instagram at UBK Guys and email us at mike@ubkguys.com and evan@ubkguys.com.